LIC Road to IPO. So what is IPO? IPO means Initial Public Offering, which is a process by which a private company can go to the public by sale of its stock to general public. So this is the definition of IPO. So how does the LIC make revenue and how the government is planning to attract investors? So in this video we'll be discussing the LIC road to the IPO. So far how the things have happened in LIC and what could be the government planning to attract the investors. The Life Insurance Corporation IPO, wherein the government, which owns 100% of LIC, will be offloading 5% of its stakes through IPO. So all these procedures from the IPO, which is in the form of an offer for the sale, as is expected to total of around 60,000 crore, will go towards meeting the government disinvestment target by financial year 2022. So basically the question arises, what does LIC do? LIC makes money by selling various kinds of life insurance products. The company collects premiums from the customers, promising to pay a certain amount as an insurance cover in case of death, disability due to accident, etc. So these are kind of insurance policies. Then, like any other insurance company, the LIC annually pays out less against individual claims than what it collects as a premium from all its policyholders as it makes profit. The company also invests some of the premium it collects and other surplus money into stocks, government bonds and other investment products, the returns from which add to the overall profit. So LIC, which manages about 37 lakh crore assets and underwrites 3 out of 4 life insurance policies in the country, reported that a net profit of around 1,437 crore in the first half of financial year 2022. LIC also redistributes most of its profits back to the policyholders in the form of bonuses. In fact, Life Insurance Corporation currently pays out just 5% of its profit to the sole shareholder and the government. The remaining 95% of the profits is either reinvested back into the company or distributed to the policyholders as a bonuses. This also allows LIC to make its insurance policies to the policyholder as an investment product, besides the element of risk coverage. And also these critics argue that returns offered by the LIC are low when compared to other investments. Why the policyholders are worried about IPO? The government, which wants to sell around 5% of its stake in the LIC to the public, had recognized that the way LIC distributes its profit can turn out to be a problem in attracting a lot of investors. So investors who buys the shares of LIC would want a larger share of profits earned by LIC each year if they are to purchase the shares offered by the government at the price desired by the government. After all, the price that investors are willing to pay for the shares of any company depends on future cash flow that they expect from owning the shares. All this means that the share of the profits that are distributed to the policyholders is likely to drop as the government tries to sell its stake in LIC at the best price. In fact, the report suggests that by the year of FY25, that is financial year 25, the share of LIC profit that would be distributed to policyholders would drop to 90% from 95%, with the remaining profit going to shareholders including the government. In short, as the government tries hard to make its stake sale attractive to investors participating in this IPO, the returns that policyholders could expect from their policy could diminish going forward. So what lies ahead? Policyholders may likely reconsider the investment in LIC product as the percentage of the LIC profits redistributed to them dropping going forward, thus affecting their returns. Also, the primary appeal of the LIC among policyholders has been implicit sovereign guarantee offered by the centre, which has convinced policyholders to park the money with LIC despite low returns. In fact, in a country like India, which has no proper safety net for citizens, some have seen LIC as offering low but safe return to the million of citizens. Supporters of the IPO, however, argue that the hit to policyholder returns must be weighed against the benefit of greater private participation in the management of LIC assets. LIC parks most of its capital in government bonds, and this money can be better used in other ways that yield high returns and also help the economy. The higher return can even trickle down to the policyholders if great competition is encouraged in the insurance industry. With a greater share of profits going to shareholders, returns would also become commensurate with the risk undertaken. It should be noted that LIC had been used as a piggy bank by the centre for the years to bail out many failing businesses. Now LIC purchase of IDBI, for instance, came under the criticism as making no business sense. LIC's investment in other struggling companies such as DHFL, Reliance Capital, etc. have also come under similar scrutiny. There is likely to be greater resistance from the shareholders such as non-core use of LIC's capital when its shares are traded publicly. So this is regarding the LIC's road to IPO, how does the LIC make revenue, and how government is planning to attract investors, and what does the LIC do, and why are the policyholders worried about the IPO,